Welcome to session 3 of the Town and Parish Council training. Uh, I'm Jennifer Rice, I'm the Communications Analyst for the Fund. What are we covering today? We're going to start with looking at how to complete the PN11 template. Then we're going to move on to a quick refresher of how to complete the monthly returns. And then we'll look at the M99 reconciliation, and we'll finish with looking at the suspension notices. If we have time at the end, we'll also be able to answer some questions here at the end of the session. So to begin with, I'm just going to pass over to Jackie, who's going to take you through the PN11 template. Jackie.
Good morning and welcome to everyone who's joined us. The PN11 session is going to cover a revision of what's on the PN11 template from top to bottom. Some of it will be very straightforward, some of it a little bit more complicated, so I hope you find it useful. The PN11 summarises the contributions that you're paying to us, and it should mirror the contributions on the monthly data return, which you submit to colleagues on the valuation team. First thing that you need to complete at the top of the PN11 is the month that the contributions relate to. What you need to do is to select the date that your payroll period covers from the month ending drop-down, which is here. And please do be aware that this will cause the integrity checks at the top of the sheet to flag as errors, as the form is now looking for all of the data to be completed. Once you've completed the form fully, these errors will clear so that you can save the PN11 and submit it to us. The date that you select when completing the template should be the date that payroll figures relate to. So if you're entering the October payroll figures, then select October for the date on the PN11. We, of course, work a month behind, so you'll be aware that we will only start to process the October PN11s in November. And just a reminder that the deadline for submitting the PN11 forms to the employer team is the 19th of the month, and contributions should be paid over to the fund within 19 days of the month in which the amounts were deducted from earnings. So payments and PN11s are to reach us by the 19th. Let's move on to the pensionable pay section. The LGPS defines pensionable pay as all the salary, wages, fees, and other payments paid to the employee, and any benefits specified in the employee's contract of employment as being a pensionable emolument. Here at the top, we have the pensionable pay main section. Here you should enter the full pensionable pay or full assumed pensionable pay total for all members who are paying into the main section of the fund. Below that, we have the 50/50 section, and here you should enter the full pensionable pay or full assumed pensionable pay for any members who've opted into the 50/50 scheme. Let's just talk in detail a bit more about assumed pensionable pay. The assumed part of the pensionable pay is for members who have reduced pay due to sickness or ordinary maternity or paternity leave. This is because your employees should be treated as if they are still working their normal hours. So the pensionable pay will need to be amended to show the APP for them, rather than any reduced amount. The same applies for any member on nil pay due to sick leave. The employee should be treated as if they're working their normal full hours. Now, in our next slide, we'll just remind ourselves that not all pay to employees is pensionable. So we're just going to have a look at some of the exceptions here. Any sum which has not had income tax determined on it is not pensionable pay. Any allowance paid in respect of expenses incurred in relation to employment. Any payment in consideration of loss of holiday. Any payment in lieu of notice to terminate a contract of employment, and any payment as an inducement not to terminate a contract of employment. Any amount treated as the money value to the employee of the provision of a motor vehicle, or any amount paid in lieu of such provision. any payment in consideration of loss of future pensionable payments or benefits, any award of compensation for the purpose of achieving equal pay in relation to other employees, and that's excluding any sum representing arrears of pay, any payment made by the scheme employer to a member on reserve forces service leave, and any payment relating to returning officer or acting returning officer fees other than fees paid in respect of local government elections or parliamentary elections. The next thing we need to complete on the PN11 is the number of posts. You should enter here the number of roles paying into the main or 50/50 pension scheme. If one member has 2 jobs and contributes to the pension fund for both roles, this would be counted as 2 posts. Then working down the template, we come to the employee main and the employee 50/50 section. So box A1 is the employee main section. That's here. And you should enter here the total of the contributions paid by members paying into the main scheme. And this figure should reflect the total deducted from the employee's salary. And again, I do apologise. And then there's the employee 50/50 section, and here you should enter the total of the employee contributions paid by members paying into the 50/50 scheme. We then move on to the additional employee contributions, which can cause some confusion. First of all, we have the employee additional LGPS contributions, which are the pre-2014 scheme. These are also known as added years and can also be known as additional regular contributions. This should be the total amount of any extra pension purchased prior to 2014, which is being paid across on a monthly basis. The employee should have an agreement with Essex Pension Fund to purchase added years towards their pension. This current scheme began in 2014. There will be no new agreements that are added to the prior 2014 scheme. So if you have a member who is paying extra towards their pension and their payments started after March 2014, they should not be entered into this box, and they'll need to be included in the employer APCs, which is the box below. The employee APCs, this box is for additional pension being purchased from April 2014 onwards, which is being paid to us monthly by employees. You should also include in this box any additional pension contributions that a member may be paying because they've purchased lost pension. Members can find more information on APCs along with the APC calculator at www.lgpsmember.org. Employer, HR and payroll providers can refer to the administration guides on the LGPS Regs website for more information on purchasing lost pension at www.lgpsregs.org. And now we'll have a look at the employer contribution box. And that's here. The employer contributions are pre-calculated for you, and they should reflect the full contributions expected using the pensionable pay that you've entered at the top of the form. The employee contributions are calculated by taking the pensionable pay total and multiplying by the employer rate on the form, which for town and parish councils is 24.8% currently. The employer contribution figure is locked, so if you need to make any adjustments to this figure, perhaps because the amount you're paying across is a few pennies different to the pre-calculated amount, then please enter this in box F1, which is our adjustment box. We'll look at that in more detail shortly. You will need to provide a reason for the adjustment, as well as where we need to allocate it, be it employee or employer contributions or prior year adjustments. And moving on to C1, this is added years, non-fund benefits. This will only apply to a very small number of employers across the fund. This box is for any employers who receive a recharge report from us every month. There's just a few employers for whom this historical agreement applies. They'll receive a monthly report showing additional pension that we've paid out on your behalf, and they'll need to repay that to the fund pound for pound. Then we move on to the employer additional pension contributions, also known as APCs, employer APCs. And this is where you should enter any additional pension contributions that have been paid across by the employer. One of the biggest reasons for employer APCs is buybacks. One example would be if an employee who had returned to work from nil pay, related to child-related leave or sickness, and who has decided to purchase their lost pension to ensure that they don't have a break in their service record. The employer must contribute 2/3 of the contributions owed, and the employer buyback amount should be entered here. The employee portion of this would be recorded in the employee APC box, which we've already covered. This is commonly known as a share cost APC, and the member will need to use the APC calculator found at www.lgpsmember.org to find out the costs associated. And employers, please remember that it's your responsibility to offer the option to purchase lost pension within 30 days of the member's return to work in most instances. And employers, HR and payroll providers can refer to the administration guides on the LGPS Regs website for more information on APCs and shared cost APCs. We're going to move on to the administration charge. And the administration charge is a charge that's levied by the fund for the day-to-day administration of the fund. It's worked out by taking the total of your employee contributions, including the 50/50 element, and multiplying this by 8%. Once the employee contributions for a financial year reach the £10,000 threshold, the admin should be calculated at 5% for the remainder of the year. Now let's just share some examples to illustrate this, because admin figures are something that can sometimes cause people a little bit of a headache. So calculating admin charges, if we look at a straightforward example, if your total employee contributions since the 1st of April this year are not more than 10,000 when combined, then we take the employee contribution total for the month in question and multiply this by 8%. So the employee contributions and the employee main section contributions and 50/50 scheme are added together. And in my example, we've got the main scheme and 50/50 added together, giving me a total employee contributions of £114.23, which I've then multiplied by 8%, which gives me £9.14 as the admin charge due for the month in question. So £9.14 is entered into the admin charge cell. Things can get a little bit more complicated when we bridge the £10,000 threshold. So we'll have a look at this in this example. Now, calculating admin when employee contributions bridge 10,000. Your employee contributions so far this year are £9,645. Your employee contributions for October total £474. So we can straight away see we're going to bridge the 10,000. If I add the two figures together, my balance so far and this month's employee contributions, we have £10,119 in ease adjustments. Part of the admin is now due at 8%, the part up to 10,000 and part at 5%. So to calculate this, I will say £10,000 minus the balance we have so far, £9,645, gives us £355, which we'll need to calculate at 8%. £355 times 8% is £28.40. But we've also got to factor in the element which is above £10,000. So our total employee contributions, including the month in question, £10,119, minus the £10,000 for our threshold, gives us £119 of the £474 employee contributions, which needs to be paid at 5%. So 119 times 5% is £5.95, and now I can add the element up to 10,000 plus the element above 10,000, giving me a total admin of £34.35. Now, below the admin box, we have box F1, which is where we include our adjustments. And the purpose of this box is for you to add any unusual events which are in addition to the normal monthly contributions that you're paying over to us. So the example on the screen shows a refund. If you have a refund for a member who's opted out of the pension fund within 3 months, then you should deduct the full amount here, but provide the month and the year the refund is for in the description, along with the pensionable pay amount and the employee-employer split. And that's the critical part for us, is that in order to code the opt-out correctly, we need you to provide us with the split so that we can code that across the correct accounts. And we also need the pensionable pay so that we can adjust your overall pensionable pay for the year by the amount relating to the opt-out. And then we reach the bottom of the page and the total payments which you need to fill in. And here you can see in the total payments box, there's room to include more than one payment. So if you want to pay us several payments, which add up to the total of the PN11, then that's absolutely fine. But the critical thing to remember here, and probably the element that causes most queries, is the total of the which is pre-calculated for you, must always match the total that you're paying to us. It's an audit and a fund requirement that payments and totals of the PN11 match. Otherwise, we'll need to contact you by email and request a revised PN11, or for the payment to be corrected if the PN11 figure is correct. One thing to draw attention to is that if you include an adjustment in, sorry, no, I've made a mistake there. That's not relevant at that point, so excuse me. But basically, yes, those two must match. Then we move on to the contact details. And in this section, you do need to complete all of your contact details. The reason for this is it's accepted by our auditors as an electronic signature from employers that the information is correct. It also provides us with the contact details for the individual whom we need to contact in the event of any discrepancies that we might encounter. So we ask you to fill that in. If it isn't completed, then the red integrity errors at the top of the PN11 will remain red until you address it and include all of the information that's requested. And once you've done that and you've completed the contact details, you should then be able to save the PN11 and send that over to us. And that brings the PN11 presentation to a close, and I'll hand over to Chris now.
Hello and welcome to my session. So I will be doing a quick run through of the monthly return spreadsheet. So I'm going to share my screen now with you. So hopefully people will be able to see my screen shortly. Thank you. So this is a monthly return that I have completed for August. So I've completed all my members on the file. I think I've completely finished it, and everything I believe is correct. So I just need to move my screen a little bit. There we go. So all the fields have been completed that I think I need to do. I'm then going to run the validation on the spreadsheet. It comes with a box asking you what month is the file, asking you what is the first day of the month. So this is an August file. So the date I need to enter into here is the 1st of August 2024. And then that will then run my validations. And it comes up with any errors and warnings. Any lines that have an error or a warning will be indicated in blue. So as you can see, I have a few to go through before I can submit it to the fund. So I'm going to have a look at the first member to start with. So the line is blue, which means there's an error or warning somewhere. If the field turns orange, it is a warning. That means that it could be incorrect. But this one is whole time equivalent. So I haven't actually entered a whole time equivalent in here. If a member has only post 2014 benefits, we don't need a whole time equivalent. However, we do recommend everyone should enter a whole time equivalent every single month for all members. So I've calculated what the figure should be. So I enter that figure in. My next error is on this row number 5. So this person, George Baker, I just have to say all of these members are completely fake. All the information is fake, so it doesn't matter about people seeing it. So George Baker is currently on long-term sick. He has been on long-term sick for so long that he's now gone down to nil pay. So therefore, he doesn't pay any pension contributions on anything. However, because he is on long-term sick, we need to add in assumed pensionable pay, as Jackie was explaining earlier. So to do that, you take the 3 months of full pay prior to him going on sick, adding those 3 months up, and then dividing that by 3, and that gives you your monthly APP figure. So this person has a monthly APP of £3,464.42, which is correct. Contributions is correct. The employer contributions has been calculated based on the APP amount. So again, that is correct. So even though that this line has an error, it's actually okay, because they are a member who has APP and long-term sick. So I enter that as a comment. And so I move on to the next member. So my number is field 11. So if I go across, I can see that this member has an AVC, so they're paying it into an AVC, and they've paid £3,000 into their AVC in the month of August. That is quite a high value, so it's just flagging up for you to make sure that are you correct that that figure should be that. I've accidentally put 3,000 instead of £300, so I'm going to correct that. Okay, and then I'll move on to the next member, who is this member on line 21. I go across. Again, I can see that this member is casual. They haven't worked in the month, so they have to be on the file, even if they haven't worked. But it's saying that the whole time equivalent is being entered as 0. So this person, they have an hourly rate of pay, so I'm going to have to calculate a whole time equivalent for them. So they are £11.57. So I need to times that by 37, which is a standard whole time working week, and then have to times that up by 52.14 to give the number of weeks in a year. So I can see that the figure should be £22,320.61. Okay. The next error on the file is a joiner during the month. So I'm just going to bring this up. So it's telling me that I need to enter a marital status in there. So Theodore is single. It's also asking what are his hours. So Theodore is whole time. And my standard working week is 37 hours a week. So for a full-timer, you'd enter 0. If the member is part-time, you'd enter their part-time hours in. If they are term time, you'd have to do a pro rata calculation to work out what the pro rata hours would be. So they joined the scheme on the 20th of August, 2024. Their annual pay is, I haven't made a note of that, £23,000. Next question is, are they an auto-enrollment joiner? So they're not, because they're just a contractual joiner, because they've just joined the scheme, or just joined the employer, and they are a contractual joiner. They haven't opted out within 3 months, and I need to enter an N in disclosure field. So that field should now be fixed. And then move on to my last member, who again is coming up with an error. Luna Moore is someone who left in a previous month, who has had a payment after leaving in the month of August. So this would be entered on the August file. I would need to enter the contribution date of the date of leaving. So they left on the 26th of May 2024. And then I would, so we can see that they got paid £357.15 in August. However, that pay related to May. So we would then have to enter them as a leaver. They resigned. We need to enter the data leaving again. So I've gone through my file. I believe I've fixed all the errors. So I'm going to rerun the validation. Again, the date would be 1st of August because it's the August file. It runs, and hopefully all the fields will turn white. So I've got 2 that are still an issue. So this one is the APP, which I've checked, and the figures are actually correct. And then I go down to the bottom member. It's just saying that the date isn't for a prior month, but that is correct because it is a payment after leaving, and that is relating for when the member left in May. I forgot to put an N in assumed pensionable pay. Okay, my file is now ready to submit to the fund, even though I have 2 errors on there, but they are 100% correct because I've checked the data and there are valid reasons why the data isn't what I would expect it to be. So I'm going to save that. So I'm now going to fast forward a month, and I'm going to do September's file. So first of all, I've opened up the August file. I'm going to file, save a copy. and create a September file. And then I'm going to go across and I'm going to change the contribution date to be 30th of the 9th, 2024, because this file is now going to be the September file. Okay. I then need to do any adjustments that are needed. So the member on line 3, Theo Robinson, is a leaver. So I need to enter in that he left during the month. So because he's a leaver, we need a day and address. He left on the 17th of September. His main section contributions went down to £170.89 that month, and his pay was £290.26. The employer contributions for the month were £652.01. I need to mark that they are a leaver during the month. Resignation, 17th of 9th, 24. I've calculated the whole time equivalent for them. There's no reduction to be waived. The next member actually started an APC contract in August, but I didn't know about it. So in September, I am going to be entering 2 months worth of APC onto their file. So I'm going to go across and find the APC for regular contributions, and I'm going to enter that there is £90 to pay, or that he paid this month, which equates to 2 months. And then the employer contributions for APC, £270. The member on George Baker hasn't returned from sick leave, so all the figures are going to be exactly the same for this month. Member on number 6, we have found out that they should have had a contribution rate change in April, so therefore these contributions that he's been paying for April to August are incorrect, so we need to make an adjustment on the September file. So we enter 6.5, which is what he has now got, and then we enter the adjusted figure. So it's the amount that he would have paid plus the current months that he has paid. So in September, the adjustment plus September comes to £240. I'm going to have to put a comment in there because it's going to come up with an error later. Remember on line 8, we have found out that they actually switched from main to 50/50 back in April. So again, they need a quite hefty adjustment in September. So the section of the scheme becomes number 2 instead of number 1 to indicate 50/50. The contribution rate comes to 3.25. Because it's being backdated, we need to make an adjustment to the main section. So I need to refund all of the contributions that they have paid in the main section for the between April and August. I need to refund all the pay that they received while being in the main section. I then have to do April to September's 50/50 contributions in the 50/50 section, and the pay relating to April to September in the 50/50 pay. Again, because it's quite a big an adjustment, I'm going to put a comment in there. And switch to 50/50 back in April. I then have a couple of people who have changed their pay compared to the previous month. So the member in line 14, is the previous month they worked overtime. This month they haven't. So I need to adjust those figures. I have my casual member who has actually worked for a little bit this month. So I need to enter their figures. I've got Ivy Walker is a person who is now they joined a couple of months ago, but they've actually opted out this month. And so because they've opted out within 3 months, they are due a refund. So therefore are becoming a leaver on this file. So again, I'd need to enter their address. They opted out on the 15th of September 24. Because they are having a refund, you are going to have to enter all of the refund figures onto the monthly return. So I'm refunding all of August and July, plus the little bit of September. So I am refunding £161.14 of contributions. I'm refunding £2,929.82 of pay. And I'm going to be refunding £726.60 of employer contributions. Need to enter that they are an opt-out, a leaver. Reason for leaving is an opt-out and you have refunded them. Can't remember what date I put in there. I think it was that. And I've entered the Houghton equivalent. The next member of my file was the joiner last month. I haven't been given a unique job identifier by the fund yet, so I can't get that. I either need to wait until the fund supply me one, or I can go on the employer hub and find out what that is. But if I can't get it, I'm just going to enter 0 again, which is perfectly fine for a recent joiner until you are supplied a unique job identifier for the member. So they haven't changed their address in the month, so I don't need to supply their address. Their pay is different. So I'm going to enter those figures on. They were a joiner last month, so I had the starting details on there. They're not a joiner this month, so I have to remove all of the joining information. And I need to change the joiner to an N. And I make a note saying that they were a joiner last month and I don't have a unique job identifier yet. And then the last member on my file is the payment after leaving. They haven't had any payments this month, so they need to be removed off the file. I would validate my file. It's now September. And then I would have a look to see what errors and warnings I have. I have a lot. So this one is the member who has had a leaver in the month, is it? I can't remember. Yeah, leaver in the month, where it's saying that the pay and contributions aren't quite right. What have I done wrong? I made a typo. I entered the wrong person's figures on there. Next one's the APP, which is fine. The next one is where they have had the contribution rate changed and being backdated, so the contributions and pay won't match this month, but that's fine. I have the switch from main to 50/50 being backdated. Again, it's going to complain a lot because all the figures don't match and it's not expecting negatives or such a large figure in there. It's complaining about the opt-out within 3 months because the figures are negative. It's just asking you to check to make sure the figures are correct. However, because they opted out and they have had a refund, the figures are 100% correct. And it's complaining about the unique job identifier being 0. I've put a comment on there to explain. So I'm actually happy that this file is correct. I have tweaked a couple of things. I'm going to revalidate it. And that information is now correct. I'm going to save that as my September file. And now that file is now ready to be submitted to the fund. Just wanted to do a quick bit of information. The monthly returns need to be submitted by the end of the following month. So if the file is relating to September, it has to be submitted by the end of October. If you do not submit it by the end of October, there is a late submission charge, which is within the admin strategy. So these were the figures back in 2022. The figures have slightly increased. But that is my quick run through of a monthly return and how I would submit or how I would update and submit 2 months files. I hope that's been useful. I'll now pass back for the next session. Thank you very much.
Yes, we're going to have a look at the M99 reconciliations and work our way through the document to try to give you an explanation and greater understanding of the different sections that comprise the M99. So the M99 is a reconciliation between your P11s that you pay over and the monthly return data which you submit to Chris's team. And this is ultimately to ensure that the correct contributions have been paid so that your employees will have accurate information on their annual benefit statement. Now let's have a look at the first section. The first section is the contributions due section. And here you can see the cash receipt section, followed by the reconciliation summary, and finally the PN11 part. So moving on, here what you can see on the screen is an extract of the report that we work from when we're preparing your M99s, and it summarises 12 months worth of the data, the member data which you've submitted via your monthly returns. So here you can see months 1 through to 12. What you can see here is, if we have a look at the example for the April submissions, the basic employee pension contributions on the monthly data return and the pensionable pay on the monthly data return is matching exactly to the entries paid over on the PN11 template. You can also see totals above some of the columns, and these totals provide the information that's then pulled through to the top of page 1, which is the contributions due section of the M99. So here you can see the total pensionable pay being pulled through. That's for the entire year, and the total employee contributions. Let's work through the sections shown on the contributions due. First of all, we have the pensionable pay figure in the top cell, which is the total pensionable pay pulled through from your monthly return report. Then we have the employee basic contributions, followed by any employee 50/50 contributions and any employee additional contributions for the pre-2014 scheme, followed by employee APCs, which are the 2014 scheme. Then we have the employer's basic contributions. It's not pulled through from the report that you submit. It's actually calculated using the rate for your contributions multiplied by the pensionable pay. So this is calculated on your figures. And then we have the fund deficit figure. For town and parish, the fund deficiency is actually part of your wrapped up rate. It's not paid separately on the PN11 templates. And as you can see at the top of the screen here is your overall rate, and here is the deficit element of 0.6%. So what's happening to obtain that figure is your pensionable pay multiplied by 0.6% gives us £205.67 deficit, which is due to the fund. Over on the opposite side, we have cell C1, and this is for any contributions which are paid based on historical agreements for added years. This only applies to a few employers, and you'll be aware whether this applies to you because you'll be receiving monthly added years reports from us. Then we have the financial strain box, which is where you will enter any financial strains that have been paid over to the fund over the course of the year through redundancies or early retirements. And then box D1 probably requires no explanation, as we've covered it on the PN11 presentation, but here the admin that's due to the fund for the year is calculated based on your employee contributions here, multiplied by 8% or 5% as applicable. Here we can see that only £1,965.06 in employee contributions were contributed for the year. So it's going to be that figure times 8% because we've not crossed the £10,000 threshold. And then finally, we've got the employer APCs, which we looked at on the PN11, and this is where you enter any additional contributions being paid over by the employer, and this will predominantly relate to buybacks. So that's the first section. Going down the page, we then reach the cash receipts section. And here that you can see these are figures which relate to the PN11s that have been paid over. So this section is pre-populated directly from your PN11 payments and from our accounting system. Any payments that you make to us are reconciled on a monthly basis to your PN11s. So this is an accurate representation of payments that have been made. You may also notice as we go through, we've got the employer fund deficiency, employee fund deficiency, the admin charge and the employer contributions. And you can also notice here there's a prior year adjustment for £258, and this has been separated out from your employer contributions because this will relate to an adjustment included on a P11 for one of the months of the year. As the figures don't relate to the current 23-24 reconciliation, we adjust them out of the figures so that you can concentrate on what you need to address for the present year. And then we move on to the third section, which is the reconciliation summary. And this provides an overall review of all transactions made during the financial year. So not necessarily the current year. Some of the figures that appear here can relate to the previous year. And this section doesn't provide you any example or any breakdown of how those differences have been arrived at. So we've got a penny difference on the employee basic, a 3p overpayment on employers. We can see here that the admin charge is different, but we've also got pulled in from a previous year £28.16, which will relate to a prior year M99, which hasn't been settled yet. So to find a better representation of this data, we move on to the PN11 slide, which shows us all of the information in a little more detail. So we can navigate through this from top to bottom and see what's happening here. So in the very top row, you might be able to discern over on the left-hand side of the screen, it says contributions due 2023-24. So these figures have been pulled in directly from the contributions due section of the M99 on page 1. And if you remember, that's information taken from your monthly returns. Underneath that, we have highlighted in green some figures which relate to an M99 reconciliation for 22-23, which hasn't been settled. So that's being included on the current M99 as money still outstanding. And we can see there's a total £28.16 underpayment relating to prior year M99. And then moving down, we can see that there's a total contribution row, which is the contributions due from your monthly returns, plus the unsettled M99, giving us a new position of the total contributions which are due from the employer. Then we have the pensionable, we have the PN11 section here, which gives you a breakdown of all of the PN11s paid over. And this is something that you can check through with your own copies to check that the figures that we're displaying match exactly to those that you have included on your completed PN11. So it's quite a nice section to be able to check through the information that you've submitted to us. Now in the pink box, this is where we will put any adjustments that we make to which relate to payments paid over. These could be intercode transfers, as in the case of the red box here, where we can see that £200 is being deducted from the employer contributions and moved over to the deficit contributions. And that £205.67 is what was calculated on page 1 as the deficit payment due. So what happens at the end of the year for accounting and audit purposes, we move the deficit element from your employer contributions taken from your PN11s, and we move that over to our deficit code. We've also got in the pink box an adjustment, and this is where we would adjust for any payments that have been made within a financial year, but which don't relate to that financial year. So any prior year adjustments will be deducted or added back in within this box. That then takes us to the total payments received. So this box is now totaling up all of the payments that we have received from you across our codes. And below that is the all-important line where a comparison is being made between total contributions due at the top and what's actually been paid and the totals received. Any differences that occur here are because these two don't match exactly. So here we can see that under the employee contributions, there's a 45 pence underpayment, which is resulting from a difference between the PN11s and the PN11s and the M9 and the monthly return, and also factoring in the M99, which wasn't settled from a previous year. Here we've got £12.72 difference on the employer contributions. We can see up here that £12.75 of that actually relates to the unsettled M99 from the prior year. And finally, our other difference is in the admin received. And we can see we've got £27.53, which has been underpaid. So that means across this year, and including the unpaid admin from the previous year, we've now got £27.53 difference. All of those underpayments, and can be a combination of under and overpayments, are then combined to give us the total of the M99, which is £40.70 underpaid. So what we would then do is think about how we're going to investigate this. If you have received an M99 from us and you have a balance carried forward due to the 22-23 M99 not having been settled, do request a copy of it from us if you can't, if you don't have that handy, and you can then look at the comments that we provide, which will signpost you to the months in which there are differences. Then you need to drill down and compare your PN11 to your monthly data return to see if there's a difference. And if you need to amend a monthly data return, you can then contact us. We'll send you a secure email by which you can submit the amended data, which we will then process and pass on to Chris's team so that the member's record is updated. If, however, you find that you have under or overpaid on the PN11s and the member data submitted is all correct, then you would need to settle the M99 in order to settle the position in terms of what you've paid. And finally, we can look at how we go about settling an M99. In the case of our example, we had an underpayment of £40.70, which was due to 2 years' worth of M99s needing to be settled. If I assume I have an employer and I've checked my returns, checked my PN11s, and I'm happy that I do need to settle those underpayments, then the way to do that is via payroll on your PN11 template. So in the case of an underpayment, you need to add the underpaid amounts into box F1 so that they can be included here in the total of the PN11 and then paid over to us. If you have an overpayment, then you would need to include the overpayment as a negative value in box F1. This will then reduce the total of the PN11 and the total that you pay to us. We can then offset the shortfall in what you pay us for that month by the amount that we have sitting on the account as an overpayment. I hope you found that a useful revision of the layout of the M99. And we're now going to move on to looking at suspension notices. Suspension notices. A suspension notice occurs when a town or parish council has no active members because the clerk or final employee has left the fund. It may be the case that a new clerk will be joining the fund in due course, or that the council does not intend to bring a new clerk into the fund in the foreseeable future. In either scenario, once we have been made aware that monthly contributions are to cease, we will issue by email a suspension notice letter making you aware that Regulation 664-2A of the Regulations 2013, enabling the administering authority to suspend for 3 years the requirement for an exit payment to the pension fund has been made. It will notify you of the start date of the suspension notice and that it continues for 3 years or until such time as a new clerk is brought into the fund. So in layman's terms, this letter is allowing you to have a 3-year grace period before you would need to pay to exit the pension fund. Now, here you can see an extract that's actually taken from the March 2022 valuation report, which is published on our website, which gives you the breakdown of your contribution rate. The Town and Parish Council contribution rate is 24.8%, which is a wrapped up rate, and it consists of a primary contribution rate of 24.2% and the secondary contribution rate of 0.6%. We've met this before on the M99 presentation. This is the deficit component of your rate. And throughout the suspension period, the deficit element must be paid to the fund. To calculate the deficit element due, we look back at the contributions made so far in the financial year, and we take the pensionable pay figure for the last month in which the contributions were paid and multiply this by 0.6. This will give us the deficit payment that needs to be made to the fund on a monthly basis throughout the suspension period. And we can see from the example that the deficit that's due to be paid is £9.91. What will then happen is that we will contact you and we will send you a copy of a deficit PN11. And on the deficit PN11 will be the amount that you need to contribute to us as your deficit payment, along with your account details. All that you need to do is to change the date here in the month ending box, complete that on a monthly basis and send it over to us in line with the usual deadlines, which is the 19th of the month. The payment also needs to reach our accounts by the 19th of the month, as outlined in our guidance notes. Now, if your current resolution allows for any member to join in the role of clerk rather than a named clerk, you won't need to pass a new resolution if a new clerk joins the fund within the 3-year period. So if you decide that during that period a clerk is going to join the fund, then what happens next will depend on your resolution. So if your resolution allows anybody to join, then what you need to do is as following. Let us know who is joining by email, and then we will remove the suspension notice and update our system accordingly. And we will send out to you the original PN11 template so that you can commence sending us contributions on a monthly basis, and the new member can start to pay those contributions over to us. However, things are slightly more complicated if you do not have a resolution which allows any new members to join the scheme. If you have a resolution which named a particular individual or named the clerk who no longer works for you to be eligible for membership of the scheme, then you would need to pass a new resolution when you wish to bring a new member in. So a new resolution needs to be passed, and we will then require from you the following 3 things: a copy of the public notice for the meeting in which the resolution was agreed, and that needs to be signed by the chairperson; a signed copy of the meeting minutes of the meeting in which the resolution was agreed, and also a copy of the TPC form, which should be signed by the incumbent clerk and the chairperson of the scheme. Now, all of this information will be sent to you in the suspension letter that you saw in the first slide. So all of that information is enclosed within the body of that letter. And sometimes it can be skimmed over because it is quite a long document, but it's worth getting to grips with that so you know exactly what to do if you wish to bring a new member into the scheme. And the next thing that we need to do is think about what happens if a new member joins. The next thing we need to think about is what we would do if a new member does not join the scheme and we need to commence a suspension notice. What will happen is at the end of the 3 years, if no member has joined the scheme, you'll be contacted by us and we will advise you that the suspension period has ceased and that a fund cessation is now required. The fund will collate membership and a cash flow data for the submission to the fund's actuary, and the fund actuary will then work upon a cessation report, which will be then sent to you, but the costs for the cessation report and any charge we make for the collation of the data, any admin charge, will be payable by the Town and Parish Council. The cessation report will then determine whether there's a deficit position or a surplus position. In the event of a deficit position, this will be paid by the Town or Parish Council, and any surplus will be paid to the Town or Parish Council by the fund. That's just an overview of what happens if a suspension notice is issued. Thank you.
Thanks ever so much for that, Jackie. So I know we've gone a little over time there, so apologies for that, but I hope that's really given you a good insight into all the things that we were going to consider today. So some really big documents there, like the PN11, the monthly returns, the M99, and those suspension notices. So if after listening to all that information, you're thinking, I'm not sure if I have a question yet, maybe I'll do later, please do just drop us an email and we'll get back to you as swiftly as possible. So there is, you can contact us by phone as well if you prefer to talk to us one-on-one. That's absolutely great. You can email me. This is my main inbox, which is epfevents@essex.gov.uk. If there's anything I can't answer, I will pass it on to the relevant team, so the employer team or the technical hub or the main inbox over on the admin side of it. So feel free to send them my way. All the videos will be uploaded from these training sessions to our YouTube channel. You can go there directly using the address on screen now, or you can just go to YouTube and search for Essex Pension Fund and we will pop right up. Just a reminder, you can find all our forms and guides on the essexpensionfund.co.uk website, and all those calculators and things relating to buying additional pension and things like that are on the National LGPS website, which is lgpsmember.org. So thank you ever so much for your time today, and we hope to see you again shortly.